So hello guys, welcome back. In this one I'll be going from basics to advanced concepts and what I actually use to be profitable every single month. By the way, I have a new Instagram, so make sure to give me a follow and let's get right into it. So first of all, we gotta go over basics to understand the advanced stuff. As you can see, you have this sideways market when the price is basically created last push, and from that time we just been going sideways. So this is not the best price action you want to be trading, and this is the price action you want to be trading. So for example, let's go to weekly and let's have a look on indices. As you can see on the weekly, indices beautifully going up. Now let's go to, for example, EURUSD, and if you look at a weekly time frame on EURUSD, we hit this last push. Okay, so there's like 2000 and it's like 28, and that's the main reason why I only trade indices and also gold. Because if you know where the market is actually going, the rest is super simple. So now we understand that we have sideways market and also trendy market, and we only want to be trading this one. Obviously, the market is not moving like this, okay, creating clean lows, highs, higher low, higher high, but it's moving like this. So it's better to know that the market will probably create some lower low just to fake out some people and go higher. By the way, I'll be teaching these traps later in next videos. It's better to know the ugly but the real movement than the pretty lies. Okay, so the market is not moving like this. Okay, it will sometimes create fake moves just to induce sellers and continue higher. So it's better to know that these moves are happening and knowing how to use them for your advantage than just being trapped trying to buy from these levels. But instead of that, price will create fake move, induce sellers and go higher. So later I'll be showing you how to actually catch these moves. Okay, so if you want to have high win rate, you should probably switch from FX to indices and gold, because as you can see, it's always going up. Okay, sometimes the price will go lower, but when we have the expansion phase, you can literally make so much risk to reward in these setups. So now let's go over how to actually catch these continuations. Okay, so as you can see, we have this 1H push, this black line, and inside with this 5-minute push. Okay, so the external is the 1H, the hard time frame, and the internal is the low time frame inside the 1H push. Okay, so let me show you an example like this. So we have this external push, we have this low, we have this high, and inside, as you can see, you have multiple higher highs, higher lows. Okay, so this is the external and this is the internal. So first of all, we gotta understand how to spot the external and then how to actually catch the internal. Okay, so the external is for direction and the internal is for entry points. Okay, so as you can see, we have this last push. So we can literally just take Fibonacci from the bottom to the top. And as you can see, we created pullback into this 3/8 level. By the way, this is 3/8 level on the Fibonacci. Okay, so we created higher low to create a new higher high. Okay, so that's how indices are mostly moving. We have this push, we have this higher low, higher high, higher low, higher high. This will be higher low to create a new higher high. So as I said before, this is how the market moves when everything is aligned. Okay, price will most likely create higher low, higher high without some type of traps. So that's the reason why I always trade indices and gold, because usually the price will just continue higher with these beautiful clean movements. Let me also show you an example of a live trade from Discord using the same concept. So as you can see, we have NAS 100 on daily. Let me play the video. So as you can see, we have this huge blue candle, and then I was expecting the next daily candle to open, create a small wick and continue higher into this blue line. So as you can see, we have the same exact price action where there's a huge bullish candle. This was the blue line, so let me make it like this. Okay, and I was expecting price create small pullback and go higher into this level. This was a major level for us, but let's start on a weekly. As you can see on a weekly, the price is literally just going higher, and that's exactly what I want to see. Okay, so this last push, then we created this small pullback, but we never broke below this low. So I'm not going to count it as an external pullback. Okay, for the external pullback, we need to see close below it. So now this is just internal bullish higher low to create new higher high. So now we understand that everything is bullish. Now let's go to daily. On a daily, we have this level, which price will probably have some reaction from this level and then continue higher again. And I said the price will open, create a wick and go higher. So now let's go to 1H to see what actually happened. So we have a new daily open at this point, and I was expecting the daily candle to create a wick and then go higher into this blue zone. So now we just gotta wait for pullback into our continuation level, which would be around this point. Okay, so this was sent as our continuation level. By the way, there was also exact entry point, TP, and stop loss. As you can see, everyone was in the same trade. So now we just waiting for price to give us confirmation. So we understand that everything is bullish. We have this daily wick being printed, and then we are expecting bullish body like this. So now we are inside the wick. Now we just gotta wait for simple confirmation, which was this one. This was the entry point, stop loss like this. And as you can see, beautiful entry point and target exactly as expected. And you see the difference between the momentum. As you can see, slow bearish momentum, and then we had our confirmation. And as you can see, the momentum is completely different. So this is just an example of trade from my Discord. If you want to join, it's the first link in the description. Let's continue. So now we understand what is external and what is internal. By the way, the external can be going higher, but the internal can be going lower. Okay, so the movement on the internal to the downside is just a pullback on the external just to create new higher low and then new higher high. You do not want to catch trades like this. You want to always wait for internal align with the external, and then you can catch this point, this point, this point, just to create new higher high. And then you're just going to wait for price to go lower to create pullback into your continuation level, align with the external, and then you can do the same thing. Buy right here, buy as well, just to create a new higher high. And that's it. Super simple. That's exactly what I've been doing to stay long-term profitable. Okay, and as you can see, it's super simple. When it comes to this price action, you probably cannot do that when it comes to forex, like EURUSD, because as I said, there is no real direction. Okay, so we had this last push, for example, on a EURUSD, maybe some type of internal trend, but it's not as powerful as this one. Okay, so if the price is just going higher, you can literally imagine a magnet pulling the price higher, so you have another advantage. By the way, the 5 minute will also have internal. So let's say 5 minute is the external, 1 minute is the internal. Same thing is on a 1 minute. So 1 minute can be the external, and for example 5 seconds can be the internal. So you always want to align the low time frame with the hard time frame for the best possible precision and basically just understanding the movement. Okay, so now we understand how the market actually moves. Market doesn't care about liquidity sweeps. Okay, I know that most of y'all been told that the market is moving from liquidity to liquidity, but that's not correct. I'll be going over these concepts in the next videos, and I'll be breaking down why these concepts makes no sense. Everything is about momentum. Okay, so when the price is going higher, as you can see, we created higher low, and we have these huge momentum candles. So if you're gonna wait for liquidity sweep to go higher, it will never happen. The price will just continue higher without you, because as I said many times before, market only cares about momentum. So even though, let's say, we have multiple equal lows, price will most likely continue higher without sweeping these equal lows, because momentum is much more important than some type of low or high being swept. So hopefully it makes sense. And now let's go over how to actually catch these continuations when we have these volatile candles, because most people think for continuation we need to have pullback at least to 50% and then go higher. But if you're gonna wait for the 50% pullback, you will miss the whole move, because when we have these volatile candles, the price will create small wick when it comes to the candle and then continue much higher. So you want to understand how to catch the wick and then enjoy the expansion, because if you know how to enter inside the wick with stop loss below the wick and having this whole bullish body as your TP, as you can see, the risk to reward is literally crazy. So that's exactly what I did on Friday. I caught my entry point at the wick, SL below the wick, and then I trailed my stop loss. I caught, I think, like 1 to 7 on US30. Now let's go over how to actually catch the wick. So as you can see, every single candle got opening, wick, and also body. Okay, so we want to catch the wick, aka manipulation, and enjoy the body, aka the distribution. Okay, so this distribution, this is manipulation, and the opening is accumulation. As you can see, this is the same price action. So we have, let's say, accumulation at this point. Okay, so let's say this is a new 1H open. Okay, by the way, market is fractal, so it can also be daily, 5 minute, 1 minute. But we need to understand, when we have a new candle opening, the candle will create wick. Okay, so we created wick. The wick will most likely break below the last low. So this will be fake break just to induce sellers, create the manipulation, then go higher. So if you know how to mark the closest continuation level where the wick is most likely going to be printed, you can literally just enter at this point, SL below the wick, and just enjoy this whole movement. Okay, so this is a bit more advanced market structure that I've been using a lot. By the way, we also have some type of manipulation cycles at a certain time, but I'm not going to go over it in this video. This is probably the best way to look at the whole price action. So if we're going to go to 1H, let me show you the trade from last week. As you can see, we have this huge candle. Then I was expecting the next candle to open, create the wick into the closest continuation level, which was this one, and then go higher. And that's exactly where was my entry point. Okay, so I entered at this wick, SL below the wick, and I targeted 1 to 7 after the SL trail. By the way, I wanted to target the 4H wick, which was this one. Okay, so I want to target this level. Okay, so my entry point was actually a bit higher because this one was 1 to 10. Okay, so I trailed my stop loss around this level. So this is just example of the 1H candle opening. And as you can see, this is the best way to catch these continuations instead of waiting for price to sweep these equal lows and go higher, because as I said, everything is about momentum and you want to catch these wicks and enjoy the body, aka distribution. So hopefully it makes sense. And if you got any questions, you can just DM me on Instagram or leave a comment below, and see you next time.